Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Oh, we are in for a good one today, folks. Welcome to PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. A lot of red on the screen, which makes for an interesting show, which makes for an interesting morning. A lot to discuss today. We've got a lot of stocks down. I'm looking at what's up, and I'm seeing like random, like AMC is up, and Macy's is up, and L Brands is up, and the rest of it is all down, more or less. We got a lot of red here. We're going to break down what's leading the way down this morning and how to play this rotation. I guess you can call it that rotation. That's what it is. Nick Chahine is our guest today. He's the author of Create Income with Option Spreads and SellSpreads.com. He'll be on our show at 8:35 to discuss options. We got some earnings, but the rotation is going to be the lead story of the day. Yeah, I mean, it's going to be a fun one. We got a lot to get to. Hit the like button, hit subscribe, hit share, and then please remember that all the information on our show is for informational purposes only, not meant for investing, trading advice. Joel, how are we doing this morning in the market? I mentioned the red. Tell us about it.
Good morning, Spencer. Good morning, traders and investors. We're in the red by 15 3/4 handles, 38.57.75. Made another poke at 3,900 overnight. Turned back at 38.96. Got all the way down to 38.40. And now we're on the rebound, trying to get back over yesterday's low at 38.60. Crude made new high for the move. That's up 44 cents. It's 62.14. Gold back above 1,800. Not by much. It's basically flat at 1,809. Silver, that's down a dime here after a good day yesterday at $27.98, battling the $28 level. And Bitcoin, hey, volatility. If you want volatility, trade Bitcoin shares or Bitcoin currency or futures. You got up to $54,515. You are down $5,000 at $4,840. Before we bring in Triple D, because he knows the answer to this question. So yeah. I'll throw it to Spencer and Mitch. Spencer,
yeah,
what activity did I do yesterday for the first time in 3 months?
You swam.
How did you know?
That's because he sent you a picture.
No, he didn't. No,
he sent me a picture.
No, he didn't.
No, I didn't. No, he just because that's the only activity Joel does.
He's excited to be back in the pool.
Yeah, boy, oh boy.
I got some housekeeping just before we start this tech rant here too. I want to wish my dad a happy 70th birthday here today. So 70 years, wow. Happy birthday, Dad.
All right.
Is he Triple D too, or what's his middle name?
No.
No,
I can't give middle names on the show, but the initials are. He's not Triple D. No, right. Triple D.
Okay, there's only one Triple D. Okay.
Yeah, and you know what? I'm looking at the portfolio here this morning. I'm in the same boat. I got a lot of tech. Spencer's in the same boat. We got a lot of tech. It doesn't feel good when your long-term portfolio is getting hit. But one thing is, this is why in my long-term invest portfolio, not talking trading portfolio, my trading portfolio I'm hedged or short sometimes, but long-term investing account, I always stay long. I buy growth to a certain extent, but I buy some value. I kind of stay diversified. And that's why my portfolio underperforms when the market's in this full growth mode. But on days like this, it's going to outperform. It's still going to be down, but it's not going to be down as much for the simple reason is that I'm somewhat diversified. Second thing is I don't use margin in my long-term portfolio. Why? Because what you got to understand, if you're 100% on margin and you're in all these growth names and the market corrects probably 30%, like we did in March, some of those growth names can be down 40, 50%, you can lose your whole account. So you don't want to be on margin in the long-term portfolio. In my opinion, I don't use margin in my long-term portfolio. Trading, yeah, because you can control the risk. You're slipping in and out. You're small. You're getting in and out. But long-term portfolio, if you're all in on margin and you're all in on growth and you're all in on Kathy Woods, You're getting punished for it today. But you know what? You've been outperforming me for a long time in your long-term portfolio. So it doesn't go straight up. Are we in this, correction mode where we're going to drop 30, 40%? Nobody knows. Nobody knows anything. But again, just staying diversified and staying off margin in the long-term account helps on days like this. It hurts when the market's going straight up. It helps on days like this. Again, I'm not talking to you traders that are actively trading your account. You got 50,000 in your account, you got to use your margin. You got 100,000 in your account, you got to use your margin. I'm just talking your retirement accounts where people put them in, they get all on margin. You got to be careful using margin in your long-term investment portfolio, in my opinion.
Always.
I've never been on margin in my long-term investment portfolio.
Me neither.
Me neither.
Yeah. For the same reason, why, Joel? What did we see in 2001? The Nasdaq fell 81%. If we were on 200% margin, our investment portfolio is now zero. It would have been zero if we were on margin in March of 2000 and 2001. In the financial crisis in 2008, the market fell 65%. Our portfolio again would have been at zero if we were on margin in our long-term account. My portfolio got assassinated in 2008, but you know what? It came back. But if they go down and you're on margin, it goes down 50%. You're fully in. It's game over. You start over. So you got to be careful when you're using margin. Don't let your investments your trades become investments too. So you traders that are on margin, don't be looking at stocks down 10%, say, well, I can't sell down here. I mean, we're going to talk to the root of all evil here this morning, which is probably CCIV, because this is when the party really started last night. You're in this thing and people are speculating. I warned way too early. The thing was at 40, and I was like, I don't know. I think a lot of it could be already priced in. Way wrong. It went to 60, which is crazy. I thought it was overvalued at 40. It went to 60. So they announced the deal last night, and they pulled the rug out from under it. And some people are saying, it was valuation, it was that. But you know what? It was a crowded trade. Everybody was in there saying, when they announce this Lucid deal, this thing's going to pop to 100. Well, you know what? That didn't happen. So what do you do now? I'll throw that question to you. If you're in CCIV, you're in at 55, 60 bucks, lots of people in it. It's down here at 36. What do you do now? Because I bet you the majority of people on Twitter are going to be like, diamond hands, you hold. And you know what? That might work, but it might not too.
I guess it would depend why you own it. Like if you're you, Dennis, and you own it for that deal pop, you got to cut your loss. You got to get out now.
I sell them on the deal pops, but I wasn't in it.
If that's why you bought it, but if you bought it for that deal pop, then you should sell. If this is a long-term holding, then forget it, right? Then just don't even think about it, right? But
you're thinking about it this morning,
right? You're thinking about it. Of course, easier said than done. I mean, come on, how many people? I mean, everyone's got to be. Most people, I would think, maybe not, but most people are probably still up on this thing, right? I mean,
probably. You're right. Probably.
The
thing was 10, 11, 12 bucks. Lots of people are still sitting up in this thing.
Yeah.
Is it the buy at 36? I don't know anything about this. I would just say you've got to know what you were in it for. Spencer's giving you, that's his opinion, and, I completely agree with it. What were you in it for? Were you in it hiding out, thinking it's going to get the big pop to 80 or 100? Were you in it for a trade? Were you like the fundamentals and you're in this for the long-term investment? You got to know that going into the trade. But if you were in this for the pop and saying, well, now I'm going to be in it for the fundamentals, that's letting a trade become a long-term investment, and that is how you lose a lot of money. So you got to know. You have your reasoning. I've been hit on stocks. I've been in stock. I was in Bluebird Bio. I'm still in Bluebird Bio. Long-term investment portfolio. It's horrible.
Yeah.
It's horrible. It gets hit one day, just like CCIV, 45 to 30. It's been a terrible investment, but it's like 0.5. It's less now. But it's less than 0.5% of my portfolio, so you can take that. So again, staying diversified in your trading portfolio. If you're all in on CCIV, you got $100,000 in your account, and you got 200,000 CCIV. That's not the way you do it. You gotta stay diversified. I know you've been rewarded. A lot of people have been rewarded for forgetting about diversification, just jumping all in on every Kathy name possible. But again, when the market turns, we've said this, the Kathy stocks are going to get hit the worst. They're the highest multiples. Not Kathy's fault. She's buying growth. If you're investing along with Kathy, you're for growth. Well, this is a growth to value rotation. So does it go back into growth? It probably does eventually. Am I looking at names to potentially buy this morning? Sure, always looking at opportunities. But am I trying to catch a falling knife in stocks like CCIV? No, I usually like to wait till they start going up, get the momentum with you. You could get the dead cat bounce, but calling that is tough. It's tough trading. What are you doing, Joel? What are you doing with all your stuff?
Nothing.
That's a good strategy too.
Yeah,
nothing's a good strategy. If you
whenever I do something, it's in the long-term portfolio, which is occasionally sell, and it turns out to be wrong. So it's it lightened up on the way down in March, and I was looking good for like 2 or 3 weeks for one portfolio, and it came back up, and I was late to pull the trigger to get back in. So, but for these SPACs, I've been hands off on these SPACs. Yep. I haven't been touching them just because who wants to own one of these SPACs in their first earnings reports, right? I'll just go pre-market low is it came in pre-market low is at 33.53. I don't know if that's going to hold. You did bounce $4 off it. The only major support I can see in this is at 30. There's 4 lows at 30. If you want to take a flyer here, risk $7. That's your support. 30 is your support. There's some other daily lows in there that you can look at, like 33.51, 31.20.
30 looks big to me too.
30, that's it. I'll just say 30.
Yeah.
On a rebound, I have
Jump
no
out.
idea.
When stocks are moving 35%, you look for the big level. You look for the big number. What number jumps out? 30 looks like a bounce level, but is it going to bounce there? Probably. I don't know if it gets that low. It's already, way oversold probably on this news. Again, people are, saying, "Oh, Dennis is all doomsday here." This is a talk about risk. I'm not saying the market's crashing. I'm getting hit with it. If I thought the market was crashing right now, I'd be short. I'm not short. I'm not short. I'm talking about risk.
I just want to add, I made the title of the show "Market Getting Crushed." That was being a little facetious. It doesn't really come through.
We're down 0.5%.
Being facetious there, right? Obviously, the market's not getting crushed.
No,
but we're down, and that's kind of exciting, right?
It is.
It's fun. Hell yeah!
This is what markets are supposed to do. They're supposed to go up, and they're supposed to go down. They don't just go straight up in a line like they have for March. You're going to get situations. We've had, even in September, we had a 10% correction in the NASDAQ in 4 days. So, it's all just about, staying diversified and risk management. I mean, really, you had the tea leaves the last couple days. I mean, if you were all in on tech here, it was the tea leaves were already telling you to lighten up the last couple days. You could feel it.
We've
been talking about Amazon, Apple. I own all these
earnings
things.
Report. Since the earnings report,
they haven't. Yeah, Mega Tech hasn't participated at all in the last rally. It didn't participate at all. So what you had, if we just look at what's happened over the last 6 months, you've had this rally into everything, and then you had the rally into the Mega Tech because Amazon, everybody's outperforming during COVID. Then the last 6 months, Amazon, Apple, Facebook really haven't been doing much because it's been greed market. They aren't interested in Amazons and Apples. They've been jumping into the small. So they moved from mega cap tech to small cap tech. And they've been grabbing everything they can in small cap tech. And we'll grab this. And we don't care if it doesn't. We don't care if we pay 1,000 times sales. We don't care anything. We're just buying growth. Growth at any cost. Give me that. Give me that. Yep. Grab them. That's what it's been doing. Okay, well, crowded trades 101. We're very crowded. We've been crowded for a month. And we've still kept going up. So you're going to see these vicious little sell-offs here. Is this the start of something bigger? Nobody knows anything. That's why you have to always just be conscious and prepared, because it could be the start of something bigger. It could also be just another buy the dip opportunity. In all likelihood, it probably is. It probably is another buy the dip opportunity. But you got to be prepared that it might not be. And if you're sitting on 200% margin, that's, we've been warning about that.
I don't think we got anybody that's on.
I guarantee you have people sitting just margined right up on some of these small cap names. I guarantee you have some. I hope not our listeners, but I guarantee you there's a lot of traders out there that throw risk management out the window when they're making money. I'm getting more risky too. I got a bunch of SPACs.
I know you.
I'm
going to have to rein you in a little bit.
Yeah.
But what's also, the reason we're excited is because no one listens to the show when the market's going up, right? No one needs us.
It's boring.
No, Spencer, you got the statistics where
our traffic goes up a lot.
Yeah, our best shows, our biggest shows are when the market's getting crushed, and we started the afternoon show during the financial crisis or whatever, the pandemic. And so it's good for our traffic. So that's why we're excited. Maybe we have a few short.
I don't care about. I care zero about the traffic. It matters zero to me. I
I'm
just like
joking.
markets that go both ways. I know, but some people think you're serious. It sounded pretty serious. But I like markets that go both ways. Do I like my long-term portfolio? Hell no today. But you got to be able to go both ways. Like where this short stocks is evil and un-American. I mean, shorting stocks right now keeps you, diversified too. I mean, I'm staying hedged. I'm short stocks right now. I'm not going to tell you what I'm short because I don't want anybody running my shorts on me. But I'm short some stocks.
Evil.
But I'm long some stocks too. So, it's just about staying diversified. Even in your trading portfolio, and looking at when stocks are starting to breach support and break down, there's nice opportunities there. I mean, you would talk about Tesla at 780, Joel, for a long time. 780. Joel's mentioned this level on the show 5 times in the last 7 days. 5 times. What's it do? It breaches it yesterday, and what's it do? Collapses 100 points. Joel gave you a great setup there. Through 780, Tesla was a short. 677 here today. Where does it stop? I don't know. But it was a nice setup. It was a nice setup through support there on the short side.
You know what yesterday? It did, though? Oh, man. This is why the overnight trading, because I drew this, I think maybe in the afternoon show, that roughly the move from 400 to 900, that was a, 500-point move, half of that 650. What do you think the pre-market low is to the penny?
What is it?
650.
It hit 650 in the pre-market?
Yes.
Yeah.
Holy, they really hammered stuff before 7 o'clock.
Wow.
There was just people selling stuff left and right. And another thing is, if you're coming in and selling your stock at 4 or 5 or 6 o'clock in the morning, the liquidity isn't there. You see S&P's down 0.5%. You're selling Tesla down 10%. There's an inefficiency there. If I was up at that time, I would probably be buying Tesla and trying to sell other stocks against them. The portfolio.
No, honestly, the same goes for buying too, right?
It is. It's before 7 o'clock, because a lot of brokerages don't even come online. Edge isn't even on. The exchanges, some exchanges aren't even online. Edge doesn't even open their books till 7. Mm-hmm. So there's a lot of liquidity that's just not there before 7 o'clock. So you get some wild swings, and if you know what you're doing, you can make a lot of money before 7. If you don't know what you're doing, you're just selling at any cost. I mean, that's where, or you're buying at any cost, that's where you can really pay a really bad price for a stock.
I mean, there are probably people that woke up this morning and saw, Tesla down to 650, and they probably thought,
how can the price be going down? Something's wrong.
And that's probably what they thought.
The sound effects.
I mean, how can it be going down? Something's wrong there.
Oh,
right?
The sound effects.
Who was that, Spencer? That wasn't one of us.
That was from Trading Places. That may be copyrighted, honestly.
Spencer working his tail
Yeah, we're going to get fined for that one.
we
get another warning from YouTube.
You know what? Luke has it down. If you do it for less than a couple seconds, right, Spencer? The algos don't pick up on it.
There are some rules. I think the rule is I've seen less than 5 seconds, less than 3 seconds. I'm not positive exactly.
Unlike the hot potato song, we know that.
That one definitely got us flagged by YouTube. We don't play that song anymore.
No, it was those Wiggles. They didn't like us playing their stuff. The Wiggles.
My
kids loved the Wiggles. They were dancing around, rocking and rolling to the Wiggles. We were like their biggest fans, and then we play their song and they yell at us. So.
Wow!
Actually, I guess it was YouTube.
For Tesla, man, in order to get to the bottom of yesterday's range, you got to get to 710. I don't know if you
might.
Yeah,
we're wild right now. We could do anything. Yeah. I think we probably, okay, so let's go back to strategies. 2-day move. I talk about it, I haven't talked about it for a while because we're in the straight up market, which is like 100-day moves, it feels like. But classic sell-offs, usually the initial ones are you get the big wash, and then you get the follow through the next morning. Why do you get the follow through the next morning? Because you have the Johnny-come-latelys that actually have day jobs. They come home from their day jobs and they actually see, I guess it doesn't apply in lockdowns for everybody's, but the people who aren't watching the markets from 9:30 to 4 o'clock, come home at 4 or 5 o'clock, they look at their stocks, they're like, what the hell happened to my stocks? And then they go in the morning, they panic, and then they put their sell orders in the next day. So you often get a follow-through. I call it the Johnny-come-lately trade. You get a follow-through the next day. So when I get a big flush, I typically like to be short for the next morning because there's usually another flush. Usually that other flush, we'll have a dead cat bounce slightly after the open. You get another flush, 9:30, maybe 9:35, 9:40, and then the buyers start to emerge. And sometimes you can actually completely reverse. But the easy money is to actually short on the day after a big flush. So Tesla, easy money. I tweeted it even last night. 714.50 the close. It was probably a good short to close, obviously, or a good stock to short. for the 2-day move, and then it's down to 650. It's already bouncing 680, so you're in the middle of that range. Does it reclaim 715 today? It very well could. Now they're volatile; they can do anything. The setup was to short last night, cover this morning. So if you already covered in the pre-market, good job. So now it's like, it's tough. You can use that level 650. You say Tesla's cheap. Am I coming in here and backing up the truck like Kathy did? I don't know.
Was she buying Tesla yesterday? I didn't look at the report.
Let's check.
I'll tell you now.
Actually, Joel, there was a mistake yesterday. They sent out 2 emails. Because the first one had
They made a mistake on the first one.
Yeah, they made a mistake.
I know. I was trying to look up that DSY. I was like, what is this?
Yeah.
I'm like, I can't get a symbol for this. I was like, what the hell? So I hit my computer screen.
So
Like, why don't I have a
DS,
symbol for that?
DY, and YSD.
It was the first one that was on the list.
Yeah.
But one thing, so let's talk Kathy for a second. Everybody just blindly buying Kathy stocks last night. So I tweeted out, because there's people doing it. I was like, I blindly buy the Kathy stocks every night. I was not doing it. I was selling into it. And why was I doing that? Because you knew the Momo was probably going to have a tougher day again. You could already see it. CCIV news was already out there. So if you're blindly buying Kathy stocks last night, you're getting hit. And you can just bring them all up and you can just look. And obviously it's all tech. But, I'm not saying long term. I'm just saying people buy the Kathy stocks to flip them out the next day. Mm-hmm. That was not the day to do this. Open, OPEN, open door. It rallied from like 29 up to like 29.80 last night because Kathy bought it. It's 27.97. It's fallen like 7-8% from where it was last night. You can go, Surf was one that's a small one, and it's still trading higher. It's the only one I believe that is green. U is down 4.6%. Tesla obviously is down. It's the smaller names that she really moves, though, but those aren't getting a lift either. CMLF down 2.1%. There's like 20 buys. Beam is down 6%. It's getting hammered. BEAM, I'm not sure if there's news on that. RAVN is down 6%. EXPC is down 9%. So you can just kind of go through. You got to know when it's, when those strategies. It's like, have your strategy toolbox and know in the environment. And that's just screen time and experience. But I knew last night, I was like, I do the Kathy buys every night. A lot of nights, and try to do the same thing, flip them out. But you know what? Last night was not the night to do it. And I knew that because you could see the overall market weak, and you had the CCIV already news, and you're like, okay, it's probably going to be follow-through selling just because of CCIV. And the SPACs, and then it'll roll into everything else. So
just for you Beamer traders there, BEAM, I know you got the pop, but just you look at that thing and what jumps out to you, $100. I mean, I don't know where it traded yesterday. Didn't get anywhere near there, but just not as I don't know. This is almost as good setup as Tesla was at 680. But Tesla had a longer consolidation period. But keep an eye on $100 if you're trying to protect profits in BEAM. What is that? Oh, therapeutics. So $100 did get a pop, but gave some of it away down 734.
So again, like I said, I'm not kicking ass and taking names here today. My long-term portfolio gets hit. My short-term trading portfolio, I actually thought I was leaning short, and because I have just a couple growth names in there, I'm actually down overall on my overnight portfolio, which I'm shocked at. I was actually positioned for a sell-off, and I'm down slightly because there's stocks in there. Like if you have any little growth, a little touch of growth in there, it's hammered. So I had some Zynga overnight. It's down 5%. So, I mean, you're down 0.45%. That's down 4.5%. It's a stock I own in the long-term portfolio. It's a stock I would be buying on the dip. I still believe there could be a buyer in Zynga eventually emerge. So you're looking at names that I would be buying on the dip today. I like Zynga. I've liked it for a while. I think it's a nice pullback. If you want a SPAC name that I bought a little bit yesterday, obviously too early. If you want another one, though, again, remember, I like pre-deal. I like the 10 floor. I like stuff still with crypto, even though crypto's out of favor. One that, Chris Kachi's been giving us on the 11 o'clock show, and I got this one from him, is LFTR. That's potentially a SPAC, a crypto SPAC. We don't know their target, what their target's actually going to be, but it's a good management team. And Chris has talked about this one on his show, so I don't want to take all his content away. But it's potentially a crypto SPAC. It was $12 and change the other day when everybody's getting hot for Bitcoin. Now it's pulling all the way back in. You could pick that up at 1050, 1060 here today with a potential. There's never a floor. $10 is a potential floor because that's where you get your money back on the thing. But remember, they do a deal. They could cut through that. So, and anything, it's still free trading. So don't just think, a 10 is your only risk. It's in all likelihood starting to thicken up in the mid-10s, though. So at this point in time, it starts to look more attractive. They get a deal, a crypto deal, might get a pop. So that's one I like. So I just gave you 2 picks. I gave you Boeing yesterday as a pick. It had a nice pop. On LFTR, Zynga today. I like those 2 stocks on the pullbacks. That's SPAC and Zynga. There's other ones too, but if you're looking at what I could potentially buy, that's what I'd be nibbling into. I'm already in these. Joel, do you have a stock, or Spencer, you have a stock that you're looking at buying the dip on today?
I've just been having fun looking at year-to-date charts. Right.
Oh yeah, give us that. That's fun.
It's kind of just fun to look at. You see Apple down year-to-date. How many times can you say that? Right. Tesla down year-to-date. Amazon down year-to-date.
Yeah.
It's just interesting to see these these mega cap tech names, right? I mean, look at AMD, look at Nvidia, right?
Yeah.
They're all actually Nvidia's up year to date, but it's just interesting to we're what 6-7 weeks into the year,
yeah,
and you got mega cap names down for the year, which is not the worst thing in the world, but it kind of does make you want to buy the dip a little bit.
I don't know. I'd like to. I mean, I'm always looking for things to sell. The things that I don't like and like to get rid of. And boy, oh boy, I'm not happy about the Peloton here.
You're still in that, eh?
Yeah, and I don't like it. Reviewed it with the investment committee, and we were at 130 looked like a possible exit point, and that's down by the wayside. I just that trade, I would like to see a pop in that one. Yeah. It's far also, and I just looked at this L Brands. Boy, oh boy! I mean, when Dennis wanted to go into my account and sell it at 27,
I wouldn't.
Yeah,
there's a gift up here, man.
I know.
In my opinion, L Brands is a complete. You know what you want? What I think is the real sell right now is all these retailers.
I know.
I mean, Kohl's is at $56. It's $16 above where it was prior to the COVID crisis. How are these companies in better shape?
I don't know.
It makes no sense. I mean, Hilton, I believe, made a new all-time high.
I just
Hilton's
don't know
making
how.
a new all-time high. 1, it has Airbnb kicking its ass. 2, we still have COVID. My buddy was in a hotel in Florida in Hilton, and I'm like, how full is it? Well, he's like, well, they can only go half capacity, but he's like, it's like 20%. I mean, I'm like, how? It's
just
insanity that these stocks.
What if they're just slashing their employees? I mean, what if
they don't?
What?
I think it's just a complete disconnect from fundamentals. So here's your stocks trading new all-time highs. Maybe you're like relative strength and you don't care about fundamentals, but I try to do a little bit of both. Fundies, technicals, and story. All three. Try to put all those and match it all up. The technicals look pretty good on Hilton. It's making new all-time highs. I like to be sure to make new stocks making new all-time highs. But I cannot understand how the fundamentals are good. I mean, and like I said, Airbnb is still not going away. And I think, I used to always go to Hilton's, and we do Airbnbs now. This stuff hits the hotel industry eventually. So I think when we look back at Hilton at 120, I think when we look 2 years from now, I think Hilton is significantly lower. Just my opinion. I'm betting against America here, but I think Hilton and the hotel stocks making new all-time highs is absurd. I think it's a complete gift. So could it continue to go higher? I would have thought I was bearish this thing at 111, 110, 100. I mean, it's 120, so I don't know where the top is, but I just don't see it. I don't see, do I really want to, this is what I want to invest in is the hotel industry? These are all-time highs. Kohl's? You want to go and buy Kohl's because an activist is in there? Well, we learned the hard way, on activists, in different stocks. Sometimes they don't actually turn the companies around. Sometimes they do, sometimes they don't. But here's a stock that, was probably a good deal when it was $20-$30, but now they slashed the dividend to zero. Do they get the dividend back eventually? Probably. Maybe that's a catalyst. But holy mackerel, a lot of good news priced into these things.
She did.
Viacom, Joel. One more. Viacom.
Yeah.
Viacom is $66. This is a billboard. What they do but it's older types of ad. It's not social media.
There's a billboard. Is that what you said?
They have billboards. Your billboards, half of them are Viacom.
I think did they
Don't they still have that as a big part of their business?
I honestly didn't know that. No, I mean, it's Viacom.
He's right. He's right.
They're
a lot of billboards, old school advertising. Look at this trend. It's been beautiful. But this stock is $66 now. I mean, it's time to ring the register. If you're in Viacom long, congratulations. That is an unbelievable trade for you. I believe this stock is way the hell overvalued. Way the hell overvalued.
This could be a record here.
It got grabbed by the short squeeze Reddit crowd because there was a lot of people short it. But it never came back in. It just kept going. I don't understand it. I believe this is close to an all-time high for Viacom. This was a stock that was $10. It's now back to 70. That 70 is huge, man. That's the old all-time high, I believe.
Yeah, there it is.
10-year high, 69.60. Maybe it's going there. But, man, if you're sitting around for the last 3 points, I think you're playing with fire here. Eventually, it's going to be a wicked sell-off in that name.
Triple D, Duncan Dave, can you expound on what an activist investor is?
Just Spencer can do that. We'll throw that one to Spencer.
Yeah, it's a institutional or hedge fund investor that thinks they can
buys a lot of stock in a company.
Yeah, buys a lot of stock and thinks that they can juice the stock and thinks that they know best, right? So they want to get on the board, or they want to nominate people to get on the board, so they buy a lot of stock and then they make a lot of noise saying, "I demand change. I demand change. Get me on the board. Get my guy. Get my gal on the board."
Yeah.
And I just said gal. That's weird.
Could be a lady.
Yeah, it's just a weird. Anyway, and they either make changes to the board or the leadership, and they make a lot of noise because they feel the stock is undervalued, and so they're an activist, and they're just a large investor who demands change and doesn't always succeed. Sometimes they fail.
But the one thing is, too, like Carl, they know that once they get their name out there, Starboard's another one, that the stock probably pops, too, just because they're getting down dirty. So they usually buy beat-up names. They come in, they're like all of a sudden take a big position, it gets disclosed. Stock pops 5-6% because it's an activist all of a sudden going to change everything. Sometimes they turn around, sometimes they don't. Starboard's a big one. Carl Icahn, obviously, has been a big one where he picks on something that's really beat up, gets his name. He knows when he buys it, it's going to get a pop because he's in it. So that helps, and sometimes he can turn these stocks. He turns the stock around almost instantly just by him buying it. It's a matter of whether you can turn the company around. In some cases, he can't. I mean, Carl Icahn was in Hertz, and he eventually had to cut his losses near zero because the company went bankrupt. So, I mean, they do get burned sometimes, but really what happens is stock's going down, 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 usually activist strikes. They know once it gets disclosed that they're in it, the stock's going to pop. So they turn the stock around temporarily. Now, can they turn the company around? That's the question, because if they can't, then it might continue that downtrend. But if they can, the little pop maybe gets, the story a little bit better, the sentiment change towards it. Maybe the company starts to fire and do a few other things. That's the goal, is to turn struggling companies around, though.
So basically what they do is they hop on a table and they yell, "I like the stock, but only if you make these changes." And yeah, that's basically how it works. So, okay, 8:33, we're going to have Nick Chahine on, create income with option spreads. In a couple minutes, we'll talk options. I think Nick has a question about Viacom. Dennis, I don't know what you're talking about. Viacom is like a TV network conglomerate. I don't know what you mean.
Everything. They have all kinds of different media. They have billboards, too. Look it up.
Okay.
When you go drive down the highway, a lot of those billboards that you're looking at are Viacom.
Okay,
That's your advertising on.
Viacom owns CBS.
They own everything. They own a whole bunch of media, but it's older school style of advertising.
Okay.
So and that's why it's been so out of favor for so long. But now all of a sudden, everything that's value, and Viacom was cheap. Value stocks have been back in favor, and this one was a huge value stock.
So
the PE was like 9 or 10 when it was at the low.
Yeah, screen for stocks with a PE like below 20, right? Is basically for today, right? That seems to be the theme.
But what I'm saying is, if you're coming and buying these stocks now, you're doing it backwards.
But
the value trade has been on for a while.
Yeah.
No, not 5 days ago. It's been 5 weeks ago, really. It's been a value. Money's been rotating to value for a while.
What a trend line.
And it's been rotating out of mega cap and into small cap names, both value and growth. But, I mean, Viacom, Kohl's, I mean, this is, if I was all loaded up with value, I would be rotating back into growth on some names, not necessarily picking up, stocks like, that are, growth at any cost. Like, could Jemiah fall further? It's had a ridiculous run. But, I think if you got a lot of value names and they've been like shirts like Viacom, I think you ring the register and move into like more tech stuff here.
Yeah.
Honestly, I think that's what you do.
Okay.
So fading the move today.
There's a nice look at steep trend line there for Viacom. If you want to keep an eye on that.
Yeah, breaks that trend. That's a nice short.
I mean, it was even a pretty nice channel on. If it does.
It will when it does.
Eventually.
Yeah.
S&P's just hanging out here in the 3850 handle, just kind of like a 3 or 4 point range since we started the show. Just not a lot going on here. We got as low as 3840 last month overnight. Monthly low though, that's down closer to 3800, 3811 and a quarter.
All right, quick programming note before I bring Nick Chahine on.
Sure.
We heard your feedback, and so we're trying something new. We're not doing one giant 8-hour stream anymore. We are doing a different stream for every show on our channel. So this stream you're watching now, this stream will end when pre-market prep ends. And then if you want to watch Get Technical with Neil at 9:30, a new stream will come on our YouTube channel at 9:30, right? So we're going to be trying this. It'll make it easier for people to find individual shows, and I'll make more announcements as we get closer to that changeover. And so if you go to Benzinga's YouTube channel, you'll be able to see all our shows scheduled for the day. Pre-market prep is the first one. It's going to end, and then it's going to be right there for people to rewatch it. There won't be any delay from our editors. So we're trying that. Hopefully it makes it easier for y'all to find our videos and find our content quicker and not have to dig through an 8-hour stream. Okay, 8:36. Let's bring on our guest, Nick Chahine. He's the author of Create Income with Option Spreads. Our options guru joins us every other week. Nick, good morning. How are we doing?
Good morning. Doing great. Still dark o'clock out here. But excited about the show. I've been listening to you guys, and I hear Dennis's point on Viacom. I hear that, if somebody comes to me and say, hey, what should I do with Viacom? It's like, if you're asking me permission for booking profits when the chart looks this parabolic, I have nothing to say to you. But pushback on that, Dennis, is it's dangerous to short it. I'll tell you why.
For sure. Trend straight up. It keeps going up every day.
No, but regardless of what it does, even if it's selling, widgets, it doubled its revenue from 2016, so it's not like a stagnant, dying beast, so to speak. And the price to sales is still under 2. The PE is slightly under 30, so it's not cheap from that perspective, but it's not grossly mispriced, is what I'm saying. So I can't short it just based on that fundamental.
He was talking more about rigging the register.
Oh yeah,
possibly he wasn't. You can't short. You don't want to be evil.
No,
we're not allowed to short stocks anymore now.
No, right. I know.
Evil short.
I'm calling Ripley this morning 2 red days in a row. So but the price action is definitely ridiculous.
Yeah.
The way it's unfolding is ridiculous. So this is where you say, let me roll into something else that's beaten down.
It's Nick, a great point. I just want to say he's making a great point here. And Viacom was probably just too cheap. I mean, when it was down at $20-$30, trading 6 times earnings.
Yeah.
When it got down to 10, it was trading like 5 times earnings. It was just too cheap, and everybody thought it was a dying business, and it wasn't. So, and there was some short interest to drive it there too. So, yeah, the trend is not your friend coming here and shorting the stock. I'm just saying, the circus is in town. Maybe time, we say sell your peanuts when the circus is in town from Harlan Pyan. I mean, I think the circus is in town right now on a lot of value names.
Yeah. Dennis, wasn't there something going weird with the spread too in that Viacom before the merger? That was a while ago. Okay, go ahead, Nick.
No, nothing. So what I'm looking for this week is that was my focus from last week when I did my recap videos, is the control. So having a red day is fine, but having control change over hands is different. So even on red days, you could have the bulls in charge with regards to the trend inside the day. But this is what I'm looking for, control. This is where the pops get sold and you develop a descending trend line of lower highs. And then when that meets a floor, a support level, like you just mentioned, the support on the ES. So when you see lower highs hit a support level, it comes to a point, and therein lies the battle. What happens after that is the important part. So instead of watching the ticks, watching control and levels is probably the best thing traders can do here.
Hey, Neil, Nick, if you want, I'm talking slacking to Neil right now. Nick, if you want to share your screen, you can do that and show us the chart.
Let me get my question out of the way, though.
Yeah.
Okay, go.
I want to forget, because someone asked me yesterday. Nick got this question on Twitter, and it's regarding Cooper Tire.
Yeah.
That was taken over yesterday. And
I got a Twitter question. I missed it.
I did.
Oh, okay.
You're not on Twitter, Nick. I know.
But you're
you
our
take
options
it-
guy.
I
so
am
we
on
ask
Twitter.
you.
What do you mean he's not on Twitter?
I
Nick's
am
off
on
Twitter.
Twitter. I'm
Oh.
mute. I'm mute there.
Okay.
Okay.
No,
Okay,
this is
so
an
go ahead.
option questions that I got on Twitter. Sorry.
Okay.
I have 2 covered calls on Cooper Tire, CTB, and announce an acquisition by Goodyear Tire in a deal that closes on, it says February 19th. I don't know if that's next year or whatever. But he wants to know if that caused a jump in stock price and his calls are in the money. He wants to hold on to the stock. So what would be, he's exercise the calls and get the stock, or just ride things out? He wants to own the combined company.
So wait, he sold calls and he's regretting it, basically, right?
Yep.
So don't sell covered calls if you don't want to ever get rid of the stock. But the easy way to do it is to roll up and out. So that will either buy back the call at a loss if he collected less than what it's worth now, or just roll it up and out to hopefully try to expire it worthless before somebody pulls away his shares, if I understand the situation correctly.
Yep, you do. You did. Yep, they're covered and now they're underwater and he wants to get out of it. So to me, the simple thing is just cover the calls and forget about it and move on. But okay, good advice. If you roll up, I don't know when it's February 19th. If you got a whole year on it, then maybe you have a chance to do that. But go ahead. Go to your charts, Nick. Let us see what you're
so I'm trying to find the right
Yeah,
screen.
Share screen.
You can click that share button on the bottom. You can share an entire screen.
Okay,
just, one app or a specific
no,
tab.
I'll share the screen. I
Let's
don't
see
mind.
what we got. Oh yeah.
Okay, so I'm looking at control, and I think this down here on the bottom right is the best way to show it. This is the it gets wonky when I expand it. That's the small caps futures contract. So what I want to see is the descending versus the level. So that's the concept. You can probably see it in the S&P as well, but I'd have to go to definitely a smaller time frame, 60 minutes maybe. Okay, so the battle in the S&P was first at this yellow line, and then we fell below it and developed a different zone, and now below that zone. So the zone we just lost becomes resistance, and that's the purple line that represents the resistance potentially as a line, as a trend. And we're losing the battle on the level side. So pivot from February, we just lost. We are into support zones, but more importantly, I want to see the pops. What happens to the pops? So if I'm looking at one stock, I was looking at answering somebody's question in Pinterest, for example. So yes, wherever it is matters, but it matters more what happens when it pops. So if it pops towards here and starts developing lower highs, and then it hits a level that has been floor, it comes to a point, then the whoosh happens or the bounce. So that's the control part is the more important, because that's how you predict future behavior. So you know whether to buy the dip or wait. Like somebody asked me, do I buy the dip in Apple? It's like, my next question is, I can't tell you unless you tell me what your time frame is.
And we don't give investment advice.
Right. Like, would you buy the dip in Apple? It's like me answering about myself. So I would. It depends on my trading intent. So am I trading it for X period of time or what? So
That's it right there. All right.
As far as the SPX, the indices, from last Friday, I usually issue some Iron Condor setups, and the box that says 226 is my interpretation of the expected range for the week based on the options prices. You can see the NASDAQ has hit its limit real quickly. The Dow is doing pretty well as far as having still a trigger line just above current price. But all the indices are well behaved inside the expected zones, except for the NASDAQ. It's done that before in the 129, but it went back into the box basically. So if somebody sold the Iron Condor last Friday, they're still doing okay.
Nick, okay, I was going to jump in here. Just let's take it back to some of the mega cap names, and I just want to get your thoughts here, and even technical thoughts here too. I mean, Amazon, Apple, we've been talking about it. Microsoft to a certain extent, Facebook. There's so many names of the big mega caps that really didn't participate in the last like 3, 4, 5 month rally, and now they're selling off significantly. What are your thoughts here just on big mega cap? Some of the valuations were a little stretched, but it's not like we're buying 100 times sales on Amazon like you've said before. What are your thoughts here? Is this stuff you would look at, potentially writing, downside puts here? Are you looking at any of these stocks, like saying that, eventually there's a level here where I wouldn't mind owning these?
Yeah, there are definitely levels, but there's no rush to do anything because they all have to trade within the overall market prism. So if the market's correct, nothing is going to hold up. Okay. So I still own VIX calls, like I've been saying. And I can't believe how much pushback I'm getting on that one because people are looking at it like a trade. Like, oh, why is it red today? I was like, why are you looking at it today? Do you consider your car insurance every month? Hey, it's losing me money. Well, if it's not losing me money, it means I crashed my car. So if you think you need insurance, you don't buy insurance all the time, but we are at all-time highs under extremely bad economic conditions. And if you don't believe me, ask yourself, why the hell is the Fed and the government spending $5 trillion to bail us out? And another 1.9 trillion now in panic, and Yellen making comments like like the world is ending. Meanwhile, Main Street is flush with cash because the government is just flooding everything with free money. So I keep using my son as an example. He's 19. He has an hourly job, and he makes more money sitting at home. I'm just saying. Yeah. So how can you convince somebody who's 19, no, you got to get off your ass and go out there at 5 a.m. in order to earn less than what the government's going to pay you staying at home?
Yeah. Well, this is a problem we've had in Canada for years.
Yeah. So socialistic behavior. If you listed all the programs that are going on right now without listing the country, you wouldn't guess this was the number one capitalist country in the world. I have no doubt saying that. I mean, I say that with complete confidence. The number of free programs that are going on right now, bailout programs and all of that. So this is a conundrum we're in. We're doing so well because there's so much help, and the Fed we think it's in control, but it's not, because we've been talking about runaway rates for a while, and inflation comes, finally shows up in the CPI somewhere. I don't know, but there's definite inflation out there. You can no longer go out and buy a Corolla under 10,000. You used to not too long ago. You can't probably buy it under 20,000 anymore. So this is just one aspect of it. So all these mega caps work on dips. Value is there. They're not super expensive. They haven't participated to a degree. But for example, this is Amazon's weekly chart, right? So this is about 5 years worth of business. It had a nice plateau and a breakout from it. So there's nothing wrong with going sideways. That's how you...
consolidation.
Yes, consolidation. And look at it. This red-blue is just a simple trend, the simple regression line. So instead of having a dip to revert to the mean, it just goes sideways until time passes and it reverts to the mean by just going sideways.
Yeah.
So it's not a bad thing. And if I have profits in high flyers, I would roll into some good stocks that are not participated, because they were either fall, and they would fall slower than the other ones, or finally rotation from the high flying stuff, from stonks to stocks. So
that's great. You should trademark that, from stonks to stocks, because that's exactly what's happened. People have been going into every name paying 80, 100 times sales, or going into this speculative small cap name that doesn't even have a chance of making a profit there, because these stocks were ripping higher and going higher. Yeah. Those were stonks. And so maybe there will be that rotation into stocks. You're kind of seeing it, into this value trade. People going from stonks to stocks. I love that.
Short term, I don't mind trading all these high flyer names. We piled into Palantir on the dip. That was a no-brainer, and it was an immediate huge win overnight. And this is where you sell covered calls on pops like that, because it's just they're juiciest at that.
Nick, what about selling puts in Tesla here?
I don't want to own the shares, but that would be a great way for somebody that loves to buy the shares lower. I would sell a put spread to test it out, and the binary way of doing that, if you know a support level and if it's close to here, you sell it right here and you collect half the bounty, which is not my usual way of doing things. But this gives you the least amount of money at risk with a coin flip ish odds versus going lower for an 85% odds of success, but creating bigger dollars at risk, because if it continues falling, then you lose more dollars, even though you had higher odds.
Yep.
So yeah, I don't mind it for the right person. So, but I don't want to own Tesla shares because I don't want to. And
when you're writing puts, and this is what I love about Nick Chahine, is a lot of times you're doing the put spread, though, that you're just not writing a strike and then hoping that's just not going to go there. You're writing a strike and then buying a lower one just in case the SHIT hits the fan, correct?
Yes. Because, and sometimes I write a temporary put. So I did that last year in my worst idea ever, which is to buy the falling knife in U.S. steel when it was falling still. I sold a $9 put to July, and there were a few months until then. And then I immediately had seller's remorse. And I was like, wait, I don't want to own the shares. So I bought an April 2nd or 5th $8 put, and it fell to $4. So thank God I did that.
Saved you.
Yeah. So so if I don't want to own the shares, I'm not going to create risk for myself. So I've noticed on these, like what do you call these, sending scallops, where the markets or the charts rally and then they take a little dip. It was very obvious in the IWM, and they were buying almost exactly the 50% retracement of every extension. So keep that in mind. Like this one, Tesla is falling precipitously, but look, it rallied precipitously and nobody asked why. But now it's falling into a couple of candles that I would pay attention. This is just a daily chart. It's nothing fancy. So the candle right here is at 697. Well, we fell below it, and this one and this whole cluster. So I have a note to myself here. Alert weekly candle. So this must be an important weekly candle.
What price is that?
That is 607, 608.
607.
So that's where I put my, it's not always the actual scientific numbers. So I add a little I to it. But this is a nice support cluster here. By support, I put that in quotes because look at the rally. I mean, is this the 50% extension of that? Let's see. This cluster right here is a 50% of this.
You're talking about the 400 and 900 move?
Yeah, from right here.
Yeah.
From this plateau on to here, this here is 50%. So what's wrong with giving back that? And the breakdown in Tesla was right here, by the way. And I thought it would fall this much and stop. Those were my arrows. It overdid it, which is fine. And I drew these earlier too. So these are levels of contention. And this is a nice doji right here. So they're slicing through it overnight. We'll see what the action is like during the day. Actually, look, this is where it is right now on this green line.
It's cutting through a lot of support levels here today, Tesla. But it's again, yeah, I mean, it's going to be more volatile. That's exactly it, Joel. You're coming into stocks, and these feel great. Tesla going up 3-4% when the market's only up 1%. But we know when the market turns, these are going to go down a lot faster. So, I mean, you got to know what you're in. And, there's risk involved in stuff like this. Could this be another buy in the dip opportunity? It could be, But, again, if you're trading like Nick, you got to protect yourself somewhat too.
So here's a lesson for your viewers. This cluster right here. So these are volume profiles on the here. So everybody knows volume bars down there. This is the same information, only it's more useful because it tells me at what level they happened. And this orange line right here automatically draws itself as the place where most trading happened for this period of time. So if prices are falling into a busy place, it's going to be support, because if there's an imbalance of buyers or sellers, there'll be more balanced here. So if something is falling, it's going to find balance. Not saying it's a hard floor, but it's just saying it's like muck. It's going to go and then decide to fall down or bounce.
All right, Nick Chahine is the author of Create Income with Option Spreads. You can find more by going to that site. Find more of Nick's thoughts, his insights, his trades. Nick, thanks a lot.
Nick.
I appreciate the opportunity. Good show, folks. Very good show.
Fun. It's always more fun when the market goes down. All righty.
No, Spencer.
Not really, no.
Come on,
No,
Spencer.
not really.
You're un-American. Spencer, you one of those evil shorties
betting
out
against
there.
America.
I'm evil. All right, do you want to do a couple earnings, or you want to just go through
earnings? Yeah,
No,
if
okay.
you want. I mean,
we got Home Depot.
Do the big guns.
We got Home Depot. That counts. That counts for something. That's not nothing.
Report on the wrong day. Wrong day.
Should
I
they
don't care what the
cancel their-
earnings look like. It's probably going down.
I'll tell you, it was a good report. They beat on the EPS, they beat on their sales, and they gave good guidance. Look at that.
Wrong
and
day.
they raised their dividend. Look at that.
Wrong day. So, anyways, they can't do nothing. They're scheduled to report, so they report, and it's down $6.
I'm sorry, they did not provide guidance. I take that back. But good earnings.
268, you're coming into a lot of support in here, 260 to 265. It's still a company that is firing on all cylinders. I don't own it. If I owned it, I'd be holding on to it through this. But, I mean, anything can get ugly. You got to know your risk parameters there. But I think you find support in the 260s, like lower 260s maybe. And maybe you get a flush. Maybe it gives you an opportunity to get in a decent name. This is a blue chip stock.
Yeah, I don't own this one, but I've owned Lowe's for a while, and this is just kind of, I mean, this has been chop and slop since December. I mean, look at this. It's the accordion chart there. So this is too bad they didn't do a stock split or something. I would just really this 260 to like 285 range. I mean, you're throwing darts and you're almost in the middle of that area. I just keep an eye on the pre-market low. Dennis mentioned that area. That's 265. You're $3 away. If you get through that, there's 3 lows here, but you cut it through during the pre-market. What are these 3 lows at? 267. I mean, that doesn't even look like a bad area.
All the 260s look sick. Lower,
yeah,
all of it. 260 to 270 look like you're coming into support zone.
Yeah.
So I don't mind it down here. I don't like calling bottoms. I don't like buying, on an earnings report on a day that everything's getting crushed. They can really get slammed. But this thing got down the lower 260s for whatever reason, just got silly.
Look at the monthly here. Yeah, look at the monthly.
Long term, this isn't trades. Buying stocks, here it's tougher. You could get a bounce, but I don't mind. This is still a company that's doing well. Home Depot is doing well. So, and it does well in all environments.
That refrigerator that I was trying to get forever? We tried a local place, and then I don't know why Lisa tried Sears or whatever. Then finally we just canceled everything. We went to Home Depot. We got it within a week.
Oh, Home Depot's just rock.
Except it didn't have bins for the freezer. I got yelled at for that. I didn't check. But anyways, we got a few minutes here.
You want to do another earnings?
Quick. Yeah, not such a weird chart, though, please, Spencer.
Not such a weird chart. I don't control the charts.
What about NLS? Nobody, because this thing's getting crushed.
What? All right. That's not where I was going to go, but okay.
No, I know, but this is interesting because it's a crowded trade and everybody getting to the home gyms. It reversed yesterday, and you rarely see this. The stock just gave back all of its gains, in literally 2 days. It went from its high at 31 down to 22. 18 to 20? Are home gyms going away? I don't think so.
Well, check this out. Check this out. So not only did they give good. It was an okay report. EPS beat, sales missed, but they gave good guidance. They said Q1 sales are going to increase 55 to 75% year over year.
Just killing it.
And remember, Q1 does include the very beginning of the pandemic last year, right?
They made 97 cents in the quarter. It's a $22 stock. I mean, this is, bonus time for them. They're probably, once we get out of COVID, people are going to go back to the gyms. They're not going to go home gym. But some of these people like their home gyms. And, so did everybody just buy their home gym and they're not going to have sales again? Maybe that's what they're talking about. But holy mackerel. Talk about going from bliss to piss in 2 days. 31 to 22. Here's a stock that was, kicking around its 52-week high. And boom, it gives back basically 25% in 2 days. Incredible fall. Gets in the lower 20s, I think you got buyers.
Yeah, I do too. I mean, if anything, if people, I don't know what the short interest in it, but that's a pretty big windfall. I like this one. I like this in the 2022 area. Definitely.
Yeah.
Definitely.
What else we got? Let's go to the chat. Do ticker time for 5 minutes.
Drop your tickers in the chat.
What do they want to talk?
Videos and fun. So what to buy today? We've been saying what to buy today. For the last 20 minutes, we've been saying...
I've given you lots of buys.
We've given you stuff. Okay. I saw someone in chat say today is their second time listening to the show. That's great. You love it. Hit that like button. Show us some love via the like button. We appreciate that. Okay. Tickers are flying now. What are they talking about? They're talking about... Oh, okay. Interesting. Carnival. Guys, what about the reopening stocks yesterday?
Yeah.
What about the airlines and the cruise lines yesterday?
It's hard not to ring the register there, too. I mean, this has been rotation station. Do you think that the rotation is just going to continue to go into the reopening and not eventually going to have a little hiccup there? We got the South African strain. I'm long NCLH. That was a ridiculous move yesterday. That gets back up near 30. I think, maybe it's time to lighten up. It's been a good move. I did buy some Boeing yesterday. It gave it back. Does it give you a second chance? It's not good that it didn't go over 220, so I'm not liking Boeing as much as I did yesterday. It was a good trade right off the hop if you got it right off the hop. So what was the original question? I really went on a bad tangent there.
CCL.
Oh, yeah. So this is going back to the Carnival. They did an offering last night. Did it get bought? Probably. But holy mackerel, it's been a good run here, too. So, where's the pricing? We got to find out where that pricing is. What happens with today? I mean, if, we didn't have an offering here, it'd probably be higher because they're, going into this, not necessarily the Carnival's value, but they're going into this full reopening trade the last few days. So it gives it back. I think you find buyers down here for it. It's a perfect time to do an offering. Stock's hot. They were ready. I mean, you think about how GameStop wasn't ready. CCL was ready. I mean, it gets a nice 2-day pop and they do an offering. They were ready to rock and roll. They need money. They've still got to finance ships that aren't on the water. They need money. So eventually we're going to all go cruising again. That's why I was long NCLH. I thought so, but maybe it's still the case. So I kind of like the pullback on CCL, but not striking right now.
No,
it's run pretty far. I like CCL down at 20 to 22. At 25, it's a little bit.
We'll get the price later on. A big run. See where the price is. See how the street reacts to it. RCL was up $7 yesterday, and they lost $5. If they lost $10, would it have been up 14 points? I mean, that was.
We called that too, though. RCL. I thought that was kind of stock I'm like, that's the kind of stock they're going to buy. Said it yesterday when it was flat.
Big move. It
was a good move. Yep. That was time to ring the register. You got to move 10% move intraday. Probably time to ring the register. I mean, I'm looking at a lot of stocks like this rotation. You're seeing the banks all trading higher today. I'm feeling like ringing the register on all that stuff. I'm kind of more of a lighten up here as opposed to put more risk on.
Like everyone's like,
bit.
what to buy?
But I'm not lightening up on my, my Apples and my Amazons.
Buy. Someone was making fun of me about NEO last week, and they called me like a boomer when it was just hanging out here at the $60 level. Well, now, man, oh man, where's this thing going to stop? Now it's under 50, took out this support. You got a lot of air in this thing, man. Look at those 4 days up there. Maybe we got a date with the lower 40s, and then they were also making fun of me about Bumble. Maybe I'm wrong. How did they come? Oh, look at that. Oh, I'm a boomer. Look at that. He must be a boomer. He doesn't like Bumble or Neo. Right there, buddy.
I mean, this kind of stuff's getting hit. Are these stocks going to bounce back? They might.
Who was that? Step up in the chat. Who was that?
Again, I'm not coming in, and I just want to reiterate here, I said I'm lighting up. I'm looking at the stocks that are up today, like this rotation of value, and I'm selling those names. The oil stocks, there's so much crap. Like the stuff that we hated, that the market hated last year, that has run and run and run and run. And I mean, it feels like now's the time to ring the register on oil, banks, people are crowding into that stuff this morning. I think they're doing it backwards. I think the easy money was already made there. Oil has run. I mean, ExxonMobil has run substantially. What do you want? It was $33. It's $55. Oil still in secular decline. I mean, you've got opportunities here to lighten up other names. Am I coming in and selling my Amazon, my Apple today? No. But if I was long ExxonMobil, I don't know any oil stocks. I would be selling them last week. But they keep going up here. The retailers, the banks, there's a lot of names here that were just hated, and now they're loved all of a sudden. You're buying them now, man. Sold to you.
All right, we've gone overtime here. Yeah. We don't want to run into the next programming thing.
No,
here.
Actually, we have some time. Technical was not till 9:30. But again, just to recap for everyone, we're doing different streams for every show. So, here's what's going to happen. I'm going to hang out with Mitch on this stream for the next 20 or so minutes, and then we're going to pivot over to Get Technical. The link for that stream is in the chat. It's pinned. I'm putting it in there once again. I just put it in there twice. Whoops. And let me just get rid of that. Yeah, there it is. Okay. But I'm going to hang out, until then. You guys have any final thoughts before we sign off for pre-market prep? Just on today?
I like the idea of buying some dips on some good names. Like if you're in, you're looking for opportunities, you're getting some opportunities on some good names. I've given you a couple. I like Benzinga. And if you want to get down during the SPACs, I like that one from Chris Catchy, LFTR, because I think it's going to be a crypto SPAC. And I think this will all pass. I think eventually, I still think Bitcoin is still, Bitcoin's getting a pretty good dip here too. If you're not in Bitcoin, maybe it's something to think about. Again, not going all in because I'm not a big crypto guy, but I think, getting off zero isn't a bad idea too, because I don't think the story's going away. So some of the storied stocks that have been absolutely hammered are getting really, really hammered here today, and it feels like they're getting oversold. I mean, SunPower has went from 50. Look at SunPower. It's went from $57 to 31 in 2.5 weeks. I mean, it coming into support area here at 30. So I just sold mine at 51. I feel like rebuying it at 30 here today. So there are some good names, and these are high risk. You're catching a falling knife on SunPower, but there's some good, decent names in growth. I would say if you're coming in buying value today, I think you're doing it backwards. I think you got to have some guts and not necessarily buying like the Jamayas and crazy stuff, but some decent names that have really sold off. And the SunPower is a ridiculous valuation too, but it's sold off to an extreme level. So like you look at Pinterest, it's hardly sold off. So just buying that initial dip on Pinterest isn't as attractive as maybe buying some of these that have really sold off. They could turn and they could bounce. So I think adding a little bit of risk, if you've been underweight risk, this is the opportunity to add a little bit. It's just picking a little bit at a time. Don't have to go all in.
Fang,
Yeah,
cough, fang.
It just for me, I'm just gonna go like overall market. Whoa, big turn in oil. We were at $63, and now we're down 40 cents.
Yeah.
So oil turn.
I think
Maybe
it's
that's
a sell today, man. I think this is the time to sell oil today. Just my thoughts. Time to sell
I think
today.
yesterday you got you had the down open, and it did some shake and bake, and then it had a nice rally, and it rallied for majority of the day until the last hour. I don't think you're going to get that today. I think too many people are stuck off the big down open, and I think if at least wait if you're trying to buy like the broad market, wait for an undercut of the pre-market low, and then come back above it. I don't have a lot of good. Next level I have is the next true daily low is 38.11 and a quarter. I don't think we're going to get that low, but I don't think the market's going to bail you out just buying the open here and just rallying back to flat. So that's what I'm looking at. So, all right, we'll let you guys finish up here. You can bring Mitch on, and I'll be back at 3:30.
I just want to say again, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. I didn't even use a soundboard today. I used it like one time. Come on, Spencer.
Give me a soundboard to go out with.
What
do you got? No, I talked over it.
Here.
No!
That's what I
Homer
get.
Simpson?
That's
Homer
what I get
Simpson?
for not using more sounds. I mean, come on.
Disney's going to sue us now.
Killing me. You're killing me.
I think you got to turn. Can you turn those up a little bit? I think.
Yeah, I'll have to go in and make them louder.
All right, guys.
Man.
Have a good one.
All right. Thanks, Joel. Thanks, Dennis. Hit that like button. Hit subscribe. Hit share. And once again, Pre-Market Prep is available as a podcast. It's on every major podcast platform: Spotify, iTunes, SoundCloud, Stitcher, TuneIn, and that's it. Okay, so that was Pre-Market Prep. Again, I'm going to say this a number of times throughout the day because we're trying something new, different streams for every video. So I'm going to hang out here, bring Mitch on in a couple. We'll hang out till 9:30. Then we're going to pivot to the next video, Get Technical. Here, I'll just show you. You can literally see if you want. This is our YouTube channel, right? youtube.com/Benzinga. You can see all of the upcoming live streams scheduled for today. See a couple people already waiting. In a couple of them, that's great. So you will no longer have to go back into an 8-hour video and try to find when your show started. If you only want to do charts with Neil, if you only want to talk SPACs with Chris and Mitch, nope, different stream for every video. We hope that makes it easier for you. So there is that. Okay. We didn't cover a lot on the news front this morning, and there is some news. So I just want to spend the next few minutes going over that with you. I saw somebody asking if he missed the conversation about ARK. Yeah, we rewind about, I think, 8:20 Eastern time. We talked about ARK, maybe 8:15. I mean, it's no surprise, right? I mean, ARK is led the way up. And what leads the way up often leads the way down. Like the ARKW, which I own, is getting smacked around here this morning. Let me see if I can pull up a pre-market chart. Yeah, I mean the last few days, right? Thing was at 190 a week ago. It's at 166. So you got to expect this stuff, right? You got to expect the high flyers to eventually pull back and lead the way when they're doing so. I saw this interesting tweet today for everyone freaking out about the market being down. Yeah, the stream is titled "Market Getting Crushed." It's a little facetious, right? Market's not getting crushed. Yeah, we're down. There's a lot of red on the screen, not a lot of green. But put this into perspective, right? This is a tweet from Michael Batnick, who is an advisor at Ritholtz, who I follow on Twitter. The S&P 500 has been within 5% of its all-time high for 4 straight months. So, yeah, it hasn't really gone up a lot, but it's been right there on the doorstep of all-time highs. Let me pull up the SPY so you can see, right? Let me pull up a daily. Look at that. Yeah. Has it gone up a lot in the last few months? No, not really. Not compared to like March, April, May, June, July. But we're right there. We're on the doorstep of all-time highs. So yeah, it's a breather. It happens, right? I'm not freaking out. If you want to hear me freak out, go back and listen to our shows from March where we all were freaking out. This is totally normal, right? Totally normal. I want to stress that. Yeah, you're getting hit if you're overweight tech. I'm overweight tech. I'm getting hit pretty hard today, right? ARKW. What's the IBB doing? That's not the IBB. IBA. Look at that. Yeah. Not a lot there. What about ESPO? Yeah. Ouch. What about I don't know. Got a few other ones that I'm sure they're all down because I own mostly tech stocks, right? So that's what happens when you're overweight tech. It's great when you're going up. It's not so great when you're going down. So that's what I wanted to make sure you all know that, right? I mean, I sort of cringe when Neil says on his show, for example, that he's super overweight tech, like he's, so am I. But and you have to know that this is par for the course. So yeah, if you're super long Tesla, if you're like all in on Neo, yeah, this is the way it works. Nothing goes straight up. But at the same time, what Dennis was saying, look for good names you want to buy the dip on. This is maybe not the worst time to want to buy the FANG stocks. Facebook, Amazon, Apple, Netflix, really any large cap stock, Google, Nvidia, AMD. There are worse times to buy those stocks than today. Not saying you necessarily should, but there are worse times. I mean, Shopify. If you're waiting for a pullback in Shopify, down like $200 in the last week, right? I'm just trying to put this in perspective. I know it's tough when you wake up and you see Tesla, which was at what, 825 a couple of days ago. Now it's at 667. That's a bad omen. It looks bad. But if you're bullish long term, why not buy the dip? Is all I'm saying, or at least consider it, right? And maybe if you're looking at shorter term plays, Dennis was saying he would maybe consider being contrarian today and selling into this rally, selling the names that have rallied, right? Selling the banks, for example, which have been relatively strong. Look at the XLF. Not bad. Not bad for the banks. Pretty good. Look at Staples. I thought maybe Coke. Coke's done nothing. Oh, thanks for the chart, Mitch. I appreciate that. Look at the XLF again. That's pretty damn good, right? Not bad.
Pullbacks are to be expected, aren't they, Spencer?
Yeah, for sure. Absolutely, pullbacks are to be expected. So I'm just trying to, these days are more fun because they get your juices going a little bit. But I'm trying to bring some sanity to the madness. I hope, because it's not actually that insane. Maybe it feels insane, but it's It's really not. Okay, I want to do a couple earnings, Mitch, and then I'm going to hop off and get ready for Get Technical with Neil. But we covered Home Depot. I just wanted to do a few more.
Who pays attention to earnings?
I like paying attention because earnings always matter.
Spencer does. Thank you.
I do. I like earnings. So here's my Benzinga Pro, Big Commerce. They're a high flyer e-commerce name. Had earnings last night. They beat 12-cent loss per share versus a 14-cent loss per share estimate. Sales also beat $43 million versus $38 million. They gave us some guidance for the first quarter, as you can see right there. Sales guidance came in above estimates. Operating loss in the $34 million range, and sales guidance for the year came in above estimates. How is the stock doing today? Well, I bet I can tell you. Yeah, it's a high flyer, right? It's an e-commerce name, so it's down. To be expected. The earnings don't matter today for big commerce, right? There are more important things weighing on the stock, like the overall market, than these earnings. But yeah, earnings matter in the grand scheme of things, which is why I like paying attention to them. I always like having an idea of of whether a stock beat or they missed. Let's do like Palo Alto, right? PANW had earnings last night. A beat, and a guidance raise. Well, doesn't matter for now. Doesn't matter for now in the short term. But again, if you're a fundamentals guy, which I am, if you like technicals, great. Then tune in to Get Technical with Neil. He's all about charts. He's all about patterns. I'm not really about that. I'm about the fundies. I like the numbers. I like the earnings. It's good to know, right? So, yeah. And who else reported here? I'm blanking on some other names. We had a bunch of energy names report. I don't think we care about that. But we had Crocs report. We don't care about Crocs. Talking about Nautilus. Macy's reported. Let's take a look at Macy's. Well, screen there, Benzinga Pro. See those Macy's numbers. Interesting. So I don't know how comparable that EPS is. There must have been a weird adjustment there. They said they made 80 cents per share last quarter versus a 12-cent estimate. There must be some adjustment because that would be a massive beat for Macy's. Sales 6.7 for $6.5 billion. They gave guidance that's not comparable either. So I guess the sales guidance is more comparable, which is above estimates. All right. And Macy's, what kind of a stock is it? It's not a high flyer. It's a laggard. It's a dog, right?
These guys are smart.
Oh, wait, not that one. Which one?
This thing's been a total dog.
Total dog. It's actually up today. Look at that. That's how it goes, right? It's one of those days. Contrarian day. Okay. 9:17. I've been ignoring chat. I apologize. HLX had great earnings. Let's take a look at HLX. I have not seen those numbers. Don't even have it in the news feed because it's so small. What about the calendar? Always on the calendar. Yep. 3 cents per share versus an 8-cent loss estimate. Sales of $159 versus $152 million. So a beat for HLX. I don't know what kind of a stock this is. Let's take a look. Okay. Let me pull up a longer term chart. Get a feel for it. Oh, okay. So it's a laggard. It's a laggard. This thing has no volume pre-market, right? Why would it? Got some, I guess, but it's not bad. I mean, the laggers are going to lead today. The leaders are going to lag today. For now, that could all change on a dime, right? 9:30, 10 o'clock comes around. That could all change like that, like a 90-degree switch. But for right now, that's the story of the day.
It's looking interesting.
At
least up on the day are insurance companies like Aflac.
All the financials. All of them. I mean, here, what's in the XLF? Let's look at the top holdings in the XLF here. This is my favorite sites besides Benzinga Pro.
Seeing some hotels up also. So.
Yeah, let's look at like American Express. That's not an insurance, but like American Express. I mean, I bet you that's up. I mean, yeah, hey, it's up 7 cents. It's basically flat. That's up though, right? When the market's down like this, being flat, That's up. That counts as up. So, yeah, insurance all around. No Affleck sound, Vegas. We'll have to. I got a lot of work to do on the soundboard. I spent a lot of time this weekend on that, and I got a lot more sounds to find. So, soundboard is a work in progress, but I will get there. Lemonade is an insurance play, but it's also like a high flyer, right? It's a recent IPO. So really what we're talking about is stodgy insurance plays. Like Mitch, what'd you say? You said Affleck?
Yeah. So you got Travelers, TRV, you got Affleck, AFL, you got MetLife, MET, you got Chubb, CB,
super stodgy, right? Like what about Prudential? Super,
perfect. That's PRU.
That's the one. Super stodgy, right?
Mm-hmm.
Up 4 cents today.
Another sector to talk about would be media and publishing. So you could look at Discovery, even Comcast, but I like that Discovery chart. DISCA. Look at the daily on this.
All right, let's go to a daily.
Whew. This is why that Discovery Plus.
Oh my goodness!
Might have been a good buy there.
Discovery, really? I kind of lost track of this
Plus,
thing.
Man.
Hey, we talked about Viacom. Same story. It's the same chart. It's the same exact chart. Viacom and Discovery. They look identical. Let me pull it back. You know what? No, let me just compare them. Look at that. Same freaking chart. Anyway. All right.
I got an interesting chart in that area, but it's media. New York Times, NYT.
Hey, traditional media, right? Anything that's not sexy. Let me get rid of that Viacom. Yeah, anything that's not sexy, which New York Times is definitely not sexy, right? Doing okay right now.
Yeah, that's what's showing up on the kind of, if you look at the hot industries for the day.
Yeah. All right, Mitch, I'm going to hop off. Get ready for Get Technical. Again, I'm going to say this for like the third or fourth time. All of our streams for the day are already up in our YouTube channel. The link to watch Get Technical is pinned in the chat. If you're watching this on YouTube, just go to the chat on YouTube. The link is pinned there, or go to youtube.com/Benzinga, and there is the link to watch Get Technical. I will be there. Neil will be there. And we'll be on with JC Pretz at 10 o'clock. So got a fun show prepared. And that's how it's going to work going forward. We hope you like it. If you hate it, we'll change it. But for now, that's the way we do things. Okay, Mitch, I'm going to let you take the wheel. I'm going to stop sharing my screen. I'll let you take the wheel. I'm going to hop off. I will see the rest of you in 8 minutes at the Open. There will be fireworks. I'm looking forward to it. And I'll see you all with Neil at 8. See you later, Mitch.
All right, guys. So, yeah, just want to, before I get a little bit further, guys, on next, we got Get Technical. It'll be starting up at 10:30. We'll probably start it up at 9:30. It'll be starting up a little bit early, so if you guys want to switch over around 9:25, you guys can start switching on over. So we'll work on that. But definitely wanted to come through the gappers list and come through some of these stocks. So if you have a stock you want me to take a look at, put it in the chat, and I'll run through it right now. Looks like I'm seeing in the chat mention FSIL. But before we get into that one, just want to talk about the gappers list today. You're seeing some stocks up, but you got to definitely be careful with these names. I'm not seeing any big names up on here. Maybe some oil stock there, PBR. AMC is up today. That's kind of a reopening play that you could talk about, but really in long term, I'm just not a big fan in AMC, but it did get some support with that announcement that New York is going to reopen all 13 theaters. This is going to be interesting because it can do one or two things. If the demand comes back, you could see AMC bounce. But if the demand doesn't come back in AMC, and let's say even the movie theaters in New York struggle, which is what I expect personally, but we'll see what happens there. And that's going to be really the determining factor for AMC. All right, seeing a lot of stocks roll through here. I know that someone wanted me to take a look at F sales, so I'll take a look real quickly. I know that's probably on a pullback, especially today. Daily chart shows a big pullback. One thing I would say, guys, this one had 1 drive, 2 drives, 3 drives, and usually after that 4th drive, you get that pullback, right? And so now you're coming closer towards this 15 support. I would pay attention towards this level, but really, I think it can come dipping down closer towards this kind of $14 area, and that's when I would kind of start paying attention to it, and then look to risk down. The risk would be down closer towards that $10, so you're looking like a $3 risk there. So you'd at least need to get probably about $6 back. So you're looking for a potential target $20 or higher. That's how kind of I would approach this trade on FSIL. All right, let's keep going. I'm seeing Fubu mentioned a couple times, so I'll go into that one because I talked about it all the time. So let's touch that one right quick. That's Fubo. Fubo looks like it's making a hard downturn, guys. You got to be careful with this stock. It could pull back, I think, all the way down to 16. Really, in this 28 time, we're going to test it again, and you got to be careful there. There was a lot of short reports that were put out on Fubo, and there's some analysts that don't like this stock. I personally like it, but maybe not here at 35. Maybe it's just a little too extended. Maybe we need to come down into the 20s and closer into the teens, and we'll see Fubo on a big pullback today. Down, I think the low of the day was 32.77, so it's up about $3 since the low of the day. Definitely a bounce back, but be careful for the washout at the open. Always do your own risk assessment, but I think this one's pulling back. All right, so 9:26, guys, almost towards that Get Technical time. If you guys want to get to Get Technical, the link is right here in the chat, guys. So don't feel shy. I won't be mad if you go over to Get Technical, but I'm going to go over two more stocks here before I switch on over and get on out of here, guys. So seeing BNGO, but that one's just kind of a runner. I'll take a look at PLTR. I know a lot of people are been in that stock, so let's take a look at PLTR, see where it is today, see if you can get it at a discount. All right, so one of the things is this one did a big pullback towards the support, right? You see this kind of support area right here, very prominent here. So one of the things is, can we hold this support when we pull back? I would look to see if it can hold kind of this 24 area. As you can see, there's been a lot of volume. Last time this pulled back, I'm pretty sure this is when the Kathy Wood ad was. And so I would try to beat her price. Try to beat this day, the 17th of February. If I can get in lower than kind of this 25 area, maybe this 22.50, even down towards that $20, I'll feel comfortable that I'm in a better position than that hedge fund. And we'll take a look to see if this one continues on up there. The biggest question is going to be can it find some support down there at $22.50 and $20? All right, going to keep going through here, seeing a couple ones mentioned here. I'm seeing AMD. AMD is kind of what I call my indicator for tech. And reason why is because I felt like that one really led tech back in 2020. So one thing I definitely did see is this turnaround here. And this turnaround is pretty intense. The big question is, are we going to crack down towards the next support? That next support to me looks like we can come down towards this level of 76. And so it's going to be really important if we can get back above 88. But really, since about August, AMD's gone sideways. So I'm really paying attention towards that. I think you need to see this one back above 100 really before you see kind of the tech run again. So that's kind of my eyes, and I'll keep an eye on AMD. Seeing mentioned of DAL. All right, so hey, I can't blame you for looking at DAL. So let's take a look at the airlines here real quickly. Delta up there to 48 now. One thing you could see is a possible pullback closer towards this 44 and 40 area, especially kind of if the market just turns around today. But this one's definitely looked strong after this kind of reversal here at 40, and then really started pushing here at 44. Now, this one had probably a price target up there in the 50s, so just be careful here. It needs to get back up to 60s so it can kind of clear that that time from March when the pandemic happened. So it still has a little bit of ways to go. I think I would look closer towards a pullback, 45s, 40. And at the end of the day, the environment isn't looking the worst for these airlines, but you have to start thinking, when do they come back and how fast do they come back? All right, guys, so 9:29. I'm going to be wrapping up here, guys, so no more charts here. If you guys want to get to Neil, I'm going to put the link here in the chat again. It's also in the description below, guys. If you just want to open the description and click the link, definitely move on over, guys. So we're going to be wrapping up here. If you guys don't see us here, there's a reason why, guys. We're at Get Technical, so go ahead and... You guys see it there. Next show is starting up, guys. In the comments, you'll find the link also pinned in the chat. In the description, you'll find the link to Get Technical with Neil. Get on there, guys. We'll see you there. What are you guys still doing here? I see 1,448 people here. Let's go ahead and get to Get Technical, guys. Look in the description. Look at the pin in the chat. I'm putting up the link. Let's get to Get Technical. You're going to be missing out on Neil into the open, guys. So definitely get towards that, guys. You'll go ahead and hold it down there. It looks like I'm putting up the wrong time. There you go. That might be the thing there. Let's fix that. Let's fix that here. It's 9:30 to 10:30. As you guys can see, we're adjusting here, but let's get towards that. Get to the link. Hit that YouTube link. I'll put up just the link so that you can click on the link here. Get there, guys. Don't miss out. Don't miss out. All right, guys, if you're still here, you're in the wrong stream. So move on over, guys. The link is right here in the description or in the chat. Move on over to Get Technical with Neil. This stream will be shutting down in about 2 minutes, guys. So this stream will be shutting down. Let's go ahead and move on over, guys. We're going to keep it going all day long. We're just going to move streams to stream. So definitely go on over to Get Technical with Neil from 9:30 to 10:30 Eastern. It's in the description. Posting it up again here. Let's go ahead. Let's get this on. Let's move on over to Get Technical with Neil. If you want to learn some technical analysis, move on over, guys. All right, guys. Looks like we have 834 people. Let's move on over, guys. We're moving to Get Technical with Neil. Link is right here in the description or in the chat. So let's go ahead and move on over, guys. If you guys want to move into the open with Neil, definitely just switch on over to the next stream here, or you guys can go to the home button on Benzinga on our channel, and you can find the next stream right there. It's going to be right there present for the upcoming stream. Let's go ahead. Let's keep this going, guys, all day long. Go ahead and switch on over to Get Technical with Neil. It's in the description. It's in the chat. It's been probably about the last 10 messages. So if you're still here, you're definitely missing out on the show. So get on over and get technical. All right, guys, about to shut this stream down. So if you're watching me right now, you're doing the wrong thing, guys. Get over to Get Technical. The link is right here in the chat or the description. If you're watching this video later, guys, check out Get Technical. It's in the description right below. Learn some technicals from Neil as he goes right into the open, guys, so you guys can see these trades live as they happen and broken down. We'll see you next time, guys, on Pre-Market Prep. Like always, guys, stay with us. Hit the subscribe button. Hit the like. We'll see you next time on Pre-Market Prep.